As we turn our attention now over to the grain markets, this week we were joined by bar chart senior analyst Darin Newsom. This week has been dominated by news from the Federal Reserve, discussion on weather patterns, and much more. We dove into the latest when it comes to the grain markets with Darrin on Wednesday afternoon. Joining us this week on Market Journal to discuss all the latest when it comes to the markets is Darin Newsom, bar chart senior analyst. Darrin, great to have you back on the show. Thanks for making time.
Well, I appreciate you having me on again, Bryce.
We're talking to you here on Wednesday afternoon. Just about an hour ago, as you and I had this conversation today, the Fed came out with their announcement about what they're going to do with interest rates. They're going to pause. First time in 15 months they're doing that action. What do you make of that news?
Yeah, the news itself, I don't think was too spectacular. One of the things that I've tipped my hat to this to the Federal Reserve for doing for the last couple of years is front running their meetings, front running their announcements. I think it was a couple of weeks ago, Chairman Powell came out and said, look, he don't be surprised if the Fed pauses. I know there was a couple of Fed presidents talking about, there's still a chance for some rate increases. Seems like this time around, everybody's probably going to be right. The Fed did announce a pause, as you said, the first time in 15 months. But I think it was the wording of the rest of the rest of the announcement where they talked about a couple more rate hikes are possible here in 2023 with a target range of 5.5 to 5.75. So, we'll see. And that seemed to be what the market was focusing on, or markets were focusing on as we closed out the day.
All right, Darrin, as we look at the big picture of that announcement, how do you see that impacting us moving forward when it comes to the grain and livestock markets?
In the grain and livestock markets, it's going to be more of a ripple effect than anything else. There's always that tie to the U.S. dollar, and the dollar had been under a great deal of pressure, throughout much of Wednesday's session. Then when the announcement came out, it started to strengthen again. Again, it isn't because they were raising rates now, but because of the possibility of raising rates down the road. Now, is that going to change our exports outlooks at all? I don't think so. The dollar remains in a long-term downtrend, but the problem is, the world's largest buyers finding supplies from other places. So right now, we just don't have a lot of export demand for our goods, and I don't know that a change in the value of the dollar from here through the end of the year is going to change that much.
All right, good to know. Appreciate your analysis on that. Behind me right now, it's bucking bulls. You'd call it a bull market here at the rodeo, but when you look at the grain markets, what are you seeing, Darrin? Are you seeing bulls there as well?
I think there's still the opportunity to be bullish, the grain markets. If we look at the long-term future spreads, it's telling us the commercial side of the market is still concerned about long-term supply and demand. Now, if this is all going to boil down to weather, again, I've said it many times, these markets are weather derivatives at heart. And so if we see a pattern change, if every weekend starts to bring us these storms moving through the plains in the Midwest, and we actually start to see the readings, the soil moisture readings start to show some improvement, then I think that changes. I think we're going to start to see those changes in the future spreads, and they're going to lose some of that bullishness long term. But, for now, as we're heading towards another weekend, haven't seen a lot of change in the spreads, haven't seen a lot of change in the basic structure of the market, but it's always a possibility. And again, it's all going to come down to, what happens with the weather over the coming months.
When it comes to spreads, you like to break those down here on Market Journal. We always appreciate that. But you described it this week as silly season. Tell me more about that. What do you mean?
Yeah, this is silly season. Once we hit Q4 or the June, July, August timeframe, particularly in soybeans, what we've got both sides of the market, commercial and non-commercial, rolling their positions from July, which goes into delivery at the end of the month. They can roll them out in the soybeans. They can roll them out to August, September, or all the way out to new crop November. And that's even on the commercial side. We really don't know where the cash bids are being what contract the cash bids are being tied to. And it's a similar situation in corn, where we could see it go to that hybrid September contract, which is part old crop, part new crop. It shows characteristics of both. So it's difficult to get a good read on fundamentals if we use basis and spreads. So again, it's just a silly time of year. We basically just have to look at the cash price, the value of the intrinsic value of the markets themselves.
All right, Darrin, before we let you go, I need to ask you about the livestock front. When it comes to box beef prices, also cash cattle, you seeing a top on both of those markets soon?
I'm seeing a possibility of a top. I mean, this market could be getting tired. If we look at the cash indexes, the monthly charts for the cash indexes, they shot up early for both live cattle and feeder cattle. They shot up early in June and they've pulled back. And on Tuesday afternoon, We saw the first weakness in one of the boxed beef markets. I believe it was in the select, lost about 40, 50 cents. So I'm not saying that the end is near, but it could certainly be working that way. It can't stay this strong forever. At some point, you start to shut off demand. So we have to be very careful with these cash markets.
All right. All right, Darrin, I guess let's wrap up kind of on this note. Final things you're keeping an eye on. What should we be paying attention to now that we're middle of the month of June?
Yeah, the biggest thing again, the grain markets are weather derivatives, and so they're going to trade all of the weather forecasts that come out, and it just depends on which ones turn out to be right. So certainly, we're just in that time of year. Some say it's too early for weather markets, but we have to pay close attention to the weather, and probably how we come out of each weekend, go into each weekend, and come out of each weekend. So certainly be keeping an eye on that. And again, the boxed beef market to me has been a great economic indicator. So if that starts to sag, if that starts to top, what does it mean for the U.S. economy as a whole? I think that's also a discussion for another day.
Yeah. Well, I guess if we're using rodeo terms here, Darrin, we'll end with this. Say, hang on, things get a little bumpy.
That's a great way of putting it, Bryce.
Darin Newsom, our guest here on Market Journal. Darrin, thanks for the time today.
All right. Appreciate you having me on again.